I'm gonna go through GU for the previous week. Now, I might do some bar replay. I might not. I'm not really sure yet, to be honest. We'll kind of see how it goes. I don't want it to be too long. I just want to focus on some of the trades that I took, some of the losses that I took, and then just overall markups for the week. I recorded a video last night. It was like 2 hours long or something like that. Well, I thought I recorded it. I guess I must have hit the button again after I started recording and it stopped recording. I just kept going. And I only found out after my kid woke up and I had to go get him that I wasn't recording. So I'm gonna try this again. But yeah, we'll see how it goes. Anyway, so we're just gonna look at GU from Monday. I think I actually took like maybe 3 or 4 trades on Monday. I know I took a loss. I'm pretty sure my first trade was a loss, and then I got in immediately after that for I can't remember, something like 10 or 11 hours or something. And then I took another late day trade. I think it was that again, I think I took a loss getting in too early on a flip zone, and then I got swept, and then I got back in and took that trade. And then some markups for the rest of the week, and then some additional trades. So we'll take a look at it, and we'll kind of, I guess we'll just start from the higher time frame, of course. Now I'm not going to do too many markups because I think it's already marked up for me for the most part. Alright, so we have bearish monthly, overall monthly price action, right? We took out this low there, and now price has been kind of within a range. You can see that these equal lows are taken out by this massive wick, which I think was COVID, and the price is now pushed up. Now that we've kind of come into this higher time frame monthly supply zone, we're starting to get a reaction to the downside. Whether to say or not we're going to run bearish from here is still kind of unknown. If we're just looking at like the overall order flow, it's definitely possible, right, that we'll just keep continuing down. But in terms of what we have in this more recent leg, it's bullish, right? We have price coming, taking that low, and then taking this high, and then pulling down, right? So this supply zone was just a catalyst for a pullback, and the price continued higher, and now it's pushing down again. So we have kind of like a monthly demand zone here. Just this overall guide, I'd cover that wick there as well. All right, so we have this price is coming to it. We do have these buy to sell wicks as well, so you got to be aware of that, which my guess is what is causing price to pull back into this level now. So if we go to the weekly, a little bit cleaner, right? In terms of the weekly, we took out this high, which this is considered external range liquidity, this wick, mainly because you have this low, this high, price pulled down, come up. It just took out the high, just took out the wick. And then it started to push to the downside. Now, this here was our first kind of demand zone. Maybe not the strongest demand zone, but it's a sell candle. And then you can see like it's taken out. And of course, this here is a more prominent demand zone. Price took that out as well. And we've been kind of bearish since. So while we do have some weekly demand zones in terms of liquidity sweeps or sell candles, they're at this moment just being used as catalysts for pullbacks. So price hits them, pulls back, continuation short. Let's go to daily. Daily is a little bit cleaner in my opinion. This is how I've been basing the majority of my analysis, is just on this daily chart, because in my opinion it's been looking very clean in terms of structure. We have this overall leg, which I'm considering at this point just internal range liquidity. Each of these lows are, at least from here to about here-ish, they're all starting to fail, right? So that internal range liquidity is now gone. It's come up into the extreme daily supply zone, and we're starting to get this push to the downside. We've taken out this low, that low, these lows, that low there. So in theory, right, the concept of internal range liquidity is that we would be filling this void, this void here, meaning that each of these lows should technically be going, and there's a lot more to the downside here, but this is our monthly demand that we're just keeping an eye on. In terms of weekly, there's a lot going on in here. So what I would do personally is just mark up these lows, right? Sometimes you'll get a reaction to the demand zone itself. Sometimes you'll get a reaction once that demand zone fails, because again, when you're talking about bearish pricing structure and expectational order flow, these lows technically are supposed to fail, right? And just like these lows here, these structure lows, right? They're supposed to fail. And often when you get a reaction to demand, it's usually just setting up for a potential entry area, POI. So right now we have price dropping to the downside. Well, technically in the last, since the 29th of September, it's been bullish, right? In our pullback. Now this here is a pretty clean daily supply zone. I think I've got it marked down to some 4 hours, but basically we have this buy candle right here, or this candle here that swept liquidity and is part of the overall supply chain. All right, so we have this is a mitigation of these buy to sell wicks right there. Right, this candle here is the buy before this sell that took out that low. This was used as an inducement, right? Because this was a reaction to this kind of demand here. Right, there's a failure to break the low. And again, when I'm trying to determine who's in control, I'm asking myself, okay, well, if supply is in control, why does demand give a reaction? Often it's to build liquidity. So like in this case, this low it failed to break. So this high just became inducement. So price came down. This break of this low indicates that supply is still in control. You get a nice pullback, takes out these equal lows here as well. So you have a bit of liquidity to play with as well, right? So now that these lows have been swept. This reaction to demand while supply is in control got swept. So now you have liquidity on both sides of the market, right? This level here and this level here. Price comes up, right? We know that supply is still in control because of these lows failing, and then supply here, price taps into it, drops to the downside. Now at this point, we failed to break this low here, right? So we have a little bit more demand, right? And now price is tapped into this, but overall, again, right? Even though we took out this high right here, now this is what would throw a lot of people off, even on the lower time frame, right? They would say, well, it took out this high, so then it chalked to the upside. Technically, I guess you could say that, because a chalk is just a simple break of supply or demand. It's not a break of structure, right? Sometimes it is, but for the most part, it's just a little selling pressure or a little buying pressure that could indicate that price wants to trade lower or higher, right? That's what a chalk is. So in this case, yeah, it chalked to the upside technically, but it didn't break structure, right? And because we know the interaction between supply and demand, when supply is in control, that builds liquidity. So when it takes out that high and then it holds the supply chain, you can assume that supply is still in control and you can look for the shorts. Now, obviously, if you want to look for longs, you can look for longs. This is the daily chart, right? So if price gives a setup here, you take it into some supply zone, whether it's this one or this one, you know, and that's totally valid. It's just overall, right? Even on the lower time frame, this will show itself that the better move, or the pro trend move, is going to be a supply run. It's going to be a short. So ultimately, this demand zone fails, right? Here's another little reaction to this demand. Right? You can see that it fails to break this low as well. Pushes this high. Now this high doesn't sweep any liquidity. It just comes down, comes up, and then that demand fails. Once that demand fails, that again indicates that supply is in control. Now, I touched on this in my last video. You know, when's the best time to take a counter trend trade, right? If supply is in control, do you take that counter trend trade when demand gives a reaction? Personally, I don't. Maybe on a higher time frame like this, because something might set up on the lower time frame that's a little bit easier to read. But let's just pretend this is 15-minute structure, right? I typically won't take a counter trend trade until the low goes, because once the low goes, that tells me that supply is in control, and I know that it's a counter trend trade, and I know that I just hold it until a valid supply zone. So like for instance here, if we took a long position, right? Let's say we had this demand marked up, right? If we took a long position here, is that better than once demand fails, right? look at this, right? A lot of people, I think a lot of people get this wrong when they're trading counter trend, is that they look for, right, supplies in control, and it's been in control since basically these lows have gone, right? That failed, right? And then it's been in control. We got this reaction. Now, it's the last line of defense, but we have these massive equal lows here. So taking a long from this position is inherently more risky. But if you wait for the low to fail, that indicates, again, supply is in control, and often you get these pullbacks into like a valid entry area. So the actual counter trend trade itself usually has legs and it'll move. So for me personally, I wait for demand to fail. So I wouldn't take it here. I'd wait for this to set up after the low went, and then take it long. And I would understand where my liquidity is or where my supply zones are. Maybe to be safe, I would take it off at this supply zone. But the valid supply zone's here. Maybe you take 90% off here, let 10% run, something like that, right? And then you find your short, you get back in, you take maybe partials here at this demand, and then whatever, price comes down. Again, what happens, right? Now this would have been a nice counter trend trade because it does make it all the way back up, right? So maybe something sets up on lower time frame, you take it, you're okay with the risk, that's fine. But again, if you wait until demand fails and you have an inducement level, right? Because this is a reaction to this demand, it doesn't take out any liquidity itself. You have valid supply zones above. When price comes down, right? You hit this, find that entry long. You know that you're just taking out internal range liquidity to the left. You know that you just broken this demand zone, so you know that supply is still in control. So you take it long on the counter trend after demand fails. That's how I do it. I know. I'm not too sure. I don't know if a lot of people really incorporate internal and external range liquidity yet, but it's a very, very strong and important concept, I think. So if you haven't really studied it, I definitely recommend it. Brad put a really good video out on the Refined series, so take a look and see if it makes sense to you. But it'll really help you understand what price should be doing in terms of its interaction with supply and demand over a longer period, like through a range. It'll give you confidence to hold trades much longer too. So let's go to the 4 hour. All right, so this, I'm gonna just get rid of that because that's the daily zone, which is much bigger. So we've got this refined down to this kind of 4 hour range right here. Because what I like to do is, like, for instance, if I have a 4 hour zone that's marked up like this, but then price does this, right? It doesn't come into it. It just starts reacting and pulling away. I'm gonna mark up my previous supply zone in a way that can explain this reaction. I wanna know why price just pulled down here. It doesn't just come off of imbalance. It's coming off of a higher time frame POI, right? Because all this consolidation is just a higher time frame range. Well, it's a lower time frame range, but it's a higher time frame POI. So I want to know why this reaction happened, and then I will adjust my supply or demand zone to justify it. So 4 hour zone. Clearly we've been bullish. This was the failure of that demand, and then price pushing to the upside after the fact. Now, what we can do here is, what we can see anyway, is that we have let's see, this demand. Okay. Now this demand zone got wicked, and then it pulled up here, right? So you have to ask yourself, is that a valid flip zone? Now, for me personally, I like price to react to the demand and then push up and then flip. But sometimes you get a wick of that demand, and then technically you can consider that potentially a reaction, right? And then price pushes up, pushes down, indicating supply still in control. So this could be a valid POI. But again, it's the 4 hour, I want to mark it up, but I'm not necessarily going to trade directly off of it. So it's not a massive thing, right? We just want to be aware of it, And again, maybe I had this marked up here, and then price just completely missed it. I would reassess and be like, what's it coming off of? I'm like, oh, it's coming off the range. Okay, fine, right? So the one thing to note is that when you're trading against the previous leg, right? This was our previous leg, right? We have supply zones that price is going to come into, right? And if you watch the video anticipating pullbacks, you'll understand that once we get that kind of initial chalk where price indicates that it wants to trade higher, the supply zones in the middle of the leg are more likely just going to be catalysts for pullbacks. So like if we look, like at this one, right? This is, I mean, on the lower time frame, we've got buy sell wicks here, which indicated the chalk to the upside, so 15-minute stuff. But then you have this, right? Price just kind of blew through it. Price just kind of ripped right through it. So that indicates that price wants to trade higher, right? The supply zone failed. So that means all other supply zones are going to most likely fail. Now in this case, again, it's kind of the same thing. You have this supply zone, but price doesn't really react to it. What does it react to? Well, it reacts to the range, right? This little consolidation is actually reacting to the range. And what you'll notice is that because this one failed, right? This just becomes a catalyst for a pullback. Where's my next supply zone? This guy up here at the high. Right, that's just a catalyst for a pullback. This one, catalyst for a pullback, right? Once we start pressing the extreme levels, right, we can have some validity in the supply zone itself. Now, as of right now, this is more of a flip zone. This is the extreme. We know that price comes off of decisionals often, right? But we also know that price will come off extremes. So at the moment, I am unsure if price wants to trade higher or lower. My guess is that it wants to trade higher, mainly because what we have here is we have equal highs. Right, so there's available liquidity to the upside. This is not the extreme, it's just the decisional, so there's a chance that price will trade above it. If we look here, we also have this 4-hour demand zone, right? Which price is currently reacting off of, right? We can see this wick came down, it reacted to more of the range. This one's reacting to the actual sweep of liquidity, which is a better demand zone, right? So took out that low, sweep, and then pushed up. So with that being said, there's a good chance we could pop off this and go higher. If we take out this low, I anticipate this decisional maybe holding and the price trading lower. 15. Now, I want to start looking at the price action for the week. So we'll kind of look at it from Monday, which is right about here-ish. Let's see where my sessions are. Okay, so that's London. Okay, so now I'm going to do this in a way that I typically will backtest or do my case studies in. I mean, typically I'm doing them end of day. I'm not doing them end of week like this. So, you know, just full disclosure, if I do bar replay, it might be awful. I just want to deliver a message that's clear and concise. So I don't want to get too overcomplicated to show off or anything like that. So I'm just going to mark up zones, and then we'll watch levels, price come into these levels, and then we'll use that to find some of the entries that I played, some of the markups, and then we'll kind of go from there. Now, one thing that's really important about just trading in general and life in general is the idea of being consistent. Like a lot of people, they kind of confuse, maybe not confuse the idea of consistency, but they maybe it's too shallow of a concept for some people. Consistency has to be across the board, like with trading, for example. If you want to be consistently profitable, you can't just wake up and be consistently profitable. You have to be consistent in your approach. You have to be consistent in when you work on your charting, when you study. You got to be consistent with your trade management, your entries, right? Like, there's a lot of ways that we can trade the phantom methodology, right? You can apply it in a way that makes sense to you, but the trick to all this is finding that way that makes sense to you, right? So for me, I have a very specific way that I like to look at the market, and that's through the lens of supply and demand interactions, right? That's what we all try to teach as a whole, right? Is how is price interacting with supply and demand? How does it play into liquidity, you know? So I like to focus on just maybe one or two entry models, right? And then I just stick with those because I know that there's a billion other ways to trade the phantom methodology, but to be consistent, I'm just going to master one pair. I'm going to master one or two entry models. I'm going to master one trade management style, right? Where do I take my TPs? Where do I break even? It's going to be the same. It's going to be the exact same every single time, because long term, that's how you build consistency, right? That's the only way. You have to be consistent with every single aspect of trading, not just the end goal, right? Because you won't get there unless you're consistent everywhere else. Anyway, so let's look at Monday, right? Is that Monday? No, this is Monday. This Monday. That's last week. This is Monday. I don't know why Asia box is basically right here. That's Asia. Let's see if I can. Not really a big deal, is it? It's pretty close. Okay, so we have Asia, right? Lock this. And okay, yeah, so I'm just gonna mark up 15-minute POIs, and I'm just gonna study the 15-minute POIs from here. Now, we had this as a 4-hour zone that price came into, give a catalyst for the pullback. I also probably just need to turn this off. All right, we'll keep an eye on it, we'll toggle that. Now, what price did was it built equalize here. I do apologize, I am gonna go fast just because I just have to, so. Price took out the high, right? Where's my low? This is my low, all right? So we took out that liquidity and then we chalked to the downside. Now, in terms of order flow, we know we're bullish, right? The 4-hour told us we're bullish. Now we have potential for price to trade lower. So again, this is a valid supply zone. Now, personally, I would like to see the supply zone, like the overall supply zone, fail and then give a nice pullback and trade from there. But you know, that's 4-hour stuff. We're talking intraday. So if we get a 15-minute chalk, that's also valid, right? So price trades lower, and then we get this. Now, this is Asia, right? So whether or not we'd be trading that is debatable. I'm not sure if we'd want to do that. And then what do we have here, right? So this low goes, that low also goes, right? And what you can see, that if we look at this from demand interaction, demand, right? Price pushes up. This doesn't really sweep any liquidity. You could potentially say that this here, because this is the first reaction. Where's the high? So that wick just takes out this initial reaction just by a hair, not by much, right? So that's fine. Overall though, I guess this would be your demand zone. That's your initial reaction. So anyways, we're just marking out 15-minute POIs. Let's just keep continuing doing that. All right, so we have another little demand zone that we got this little buy sell wick from. Right, and all I'm doing is studying price. I just want to know why price is doing what it's doing. We'll go to lower time frame and check stuff out. All right. Let's see. Now, I'm gonna go into the 1 minute real quick. So I want to study this, right? Now, even though this is Asia, it's good to understand, again, to practice the model and understand why certain price action, you know, might play out, and then we'll kind of go from there. So we had price take out, right, these relative equal highs, and ended up taking this high here and then pushing the upside, tapping into our supply zone. And then now price has developed a new supply zone, supply. And then, yeah, okay, so let's see, we have demand. Right, you can see that this is the reaction to that demand right here. Price came up. You can see that demand ultimately failed, right? It got wicked and then price came lower. Now this wick comes in and it takes out all this liquidity right here. So for me, that's a valid zone, valid entry point. Now, again, I might not be trading it because it's in the middle of Asia, but just so we're aware, it fits the model, right? And the model that I'm looking for is basically, what's the best way to do this? If demand is in control, we hit a higher time frame supply zone, price starts to chalk to the downside. I want to see a reaction to demand. I want to see that reaction here, either sweep something or be swept. So let's say it gets swept, right? Here's that sweep, that demand fails, price pushes up, and then price pushes in. So the key thing here is understanding the higher time frame POI that price reacted to, and then following the liquidity sweep in accordance with where that demand reaction was. Right, so this is the overall pricing model that we want to look for, and this is in Phantom resources too. Right, so we're just going to stay consistent. We're going to look for something like that. This fits that. It hits the POI. Now this is a little tight, but that's okay, right? So you could trade this if you traded Asia, right? And the question now is, where's the break-even point? Now there's a couple ways to do it, right? A lot of people like to take partials at 1 to 4. I think like 20%, 25% off, something like that, 1 to 4. My personal break-even method is I use the low that caused price to pull back, right? So in this case, this one right here. So whatever piece of price action resulted in the pullback that gave me my entry, once that low goes, I will break it even, right? Because I have a lot of data on that if that happens, I'm typically safe. Price doesn't really come back to my entry, and if it does, it is what it is. It's not a big deal, right? So the next question is, you know, where's my POI? Now, here's the thing, right? I have to understand that this is probably a better demand zone to base my my idea of who's in control on, right? This is slightly aggressive. We do take this high and then we do take this low, but I understand that it's slightly aggressive, right? And again, it's Asia. We're just marking up. I'm just studying. Right, so the question is, where's my low, right? What's the best place to probably take my trade off? And that is, I mean, obviously I can see in hindsight now, but what I would do is probably just aim for this low right here, just because it's Asia and I'm not expecting much out of it. It's, you know, it's not a big deal. So here, right, 12-hour, suffer through this, little dicey. Wait a second. Why do I keep thinking this is Asia? I thought I had this marked up. This is this is New York. I don't know why I keep saying that. So anyways, aiming for this low, totally fine. This is not Asia. I don't know why I thought it was Asia. Oh, it's probably because that previous Monday that I was looking at, I thought it was Monday. Anyway. Now the real question is, am I even on the right day? Right. Okay, all right, so Monday, it's right there. So that's why. I'm sorry, I'm such an idiot. That was Friday PA. Why was I looking at Friday? Where the hell is Monday? This is why I put circles on things. Monday is here. Monday starts here. Okay, fine. All right, let's take a look at this PA right in here. Okay, so now I want to look at this price action right here, because this is a 15-minute POI, right? This, did we mark it up? No, we didn't mark it up. Right? This here is a valid 15-minute supply zone, right? So I want to be aware of it. And again, we're just studying. I'm just looking at the 15-minute POIs that give reactions, and then how those reactions form, and then go from there, right? I'm just studying it. It's sort of bar replay, it's sort of not, right? It's fine. This low goes, right? And then that indicates potentially that price wants to trade lower. This took out this high right here, which was the reaction to this demand zone. So it built liquidity, so it got swept, the low failed. When price comes back into it, a valid short opportunity. So let's go to the 1 minute. Right, we just want to see, does our entry model come out anywhere? So here we have price push up, and then come down. So we have the first chalk after the sweep. Right. That's the chalk. I'm gonna just make this lighter. And now what we want to see is that we want to see these interactions with supply and demand, right? So what we have is we have multiple levels, right? Because this actually gets swept right here. This high, it just gets swept by these wicks, just by here. So now what I see is we have, we have some demand here. Oh, look at these reactions. What's this reacting from? Okay, so this is coming off of these buy to sell wicks, right? So you have this reaction, all right? Price pushes up, you get a little sweep here. This is where I actually took my first loss. All right, so you get a sweep, you get the reaction, these buy to sell wicks. You also have these kind of demand zones in here. It doesn't really give too much reaction though. If you look at this, right, you get these little wicks and price reacts, just a little bit. There's no sweep of liquidity, so of course this sweeps it here, and then price drops to the downside. So in terms of like valid POIs that we have in this 15-minute POI that swept the previous high over there, and then broke to the downside, we know that we have a couple zones. For me, we have the extreme. Now this is more of a range thing because I'm not going to use this whole level; it's too big. So I'm going to use something like this, right? Just include a bit of the range, just because the buy candle is just too big, right? So we'll mark that up, and then we also have this one. Now this was my primary zone that I looked to enter from, right? And then what you'll notice is that price came into it. We got the reaction. Right, this is where I took the loss. Again, I think I had a 3 pip stop. All right, so I took this loss, but then I was aware of the above level here, right? The above range. So I think on this one I actually had limit on both these levels. To be fair, I'm pretty sure I put a limit on both. I didn't mark or execute either of them. And then price came in, tapped us here, right? Again, I think I had about 3-ish pip stop loss, and then price came down. So I took the loss, right? 1% on this one, and then it tagged us in here. And then I'm pretty sure what I ended up looking for here was this. Where's that low? I guess it was this one. Yeah. All right, I just aimed for the low, right? Nothing crazy. I didn't want to aim for the moon, right? That's one of the biggest things. Like, a lot of people think they're not doing a good job if they're not hitting like 20, 30, 40 R every single trade. What's this one? 9R, right? It's not really that big a deal. Like, the idea of being consistent allows you to put more risk on the table. Like, a lot of people trade 1/4% or 0.5% risk, but if you can find a way to be consistent, right, and you're not over trading, right, because you have a process, and that process allows you to be patient, right, because you're looking for a very specific setup. If you can do that, then you can trade 1%, and 9R is 9%, right? You're not doing half percentages, because a lot of people, you know, I think they kind of lose track of the whole idea that trading is a long-term game. Like, if you have the capital, you can trade just 15-minute zones with like 10 pip stops, and you will still make a lot of money. But when you have low capital, you may feel this need to kind of overtrade or overdo it, just in a sense that, like, the more you trade, the more productive you are, maybe, or the more opportunity you have to make returns. But in reality, all you're going to do is you're just going to give back a lot, right? Now, if you've mastered like the ability to do that, it's totally fine. It's fine. But for most people, you know, finding a high quality trade and just trading like 2, 3, 4 times a day max is probably best, right? And then, you know, one thing to also understand is something that, you know, I was talking to Brad about was, you know, the idea that there's not just 2 positions. You know, everybody thinks, oh, you can either long or you can short it. You also have the option to do nothing, right? Staying cash is a position, right? Protecting your capital. So anyway, now if we look at this, again, for this, the catalyst for my pullback to take to enter my trade or to tag me in was this low right here. So once this low went, I'm ready to break even. Now some people might be like, well, that's a bit far away from me. Well, fits my plan, right? And it's just important to be consistent with that stuff. So you can be consistent with that, and then you can go from there. Now this piece of price action is pretty interesting. So in terms of like a supply chain, right? A lot of times the supply chain will start from like a pretty nondescript area. Like you'll have, in this case, demand, right? And then you'll have this little buy candle, right? It might be fairly nondescript. Maybe it doesn't do anything for you immediately. But what you want to do, I'm just gonna delete that. What you want to do is you want to understand, okay, well, if price pushed up here, why did it come off of this? Like why did we get this like huge reaction off of it? It's like, well, this is valid supply. It's like, okay, well, if that's valid supply, that would mean potentially that this here is part of the supply chain, right? Now, one of the tricky things about supply chains is that if this was the kind of origin of that supply chain, right, this is the mitigation. Typically it follows the mitigations and this becomes like the new like chain, right? However, a supply chain doesn't normally fail until like the originating supply level goes. So for instance, like if price came above this level or something like that, but it's still within this level, it's still valid to short it, right? I think this is where I took my next loss for the day. So I traded this. Yep. Place it right here. I think I had 2.5. I had something that was just covering the high, but I believe spread did end up taking me out. So spread took me out. It came in, it held that supply chain, right? The origin, right? It just meant that there's something in the wick here that it wanted to take. So this took me out. So I took a loss here. But as soon as we broke to the downside, right? We took this little, we started to show bearish price action on the reaction to that supply. I used this POI right here as an entry. And I just scalped it, right? I didn't do anything. It was late. It was towards the end of the day, right? So I had 1.5 on this, I think. But somewhere between 1.5 and 1.8. And I just aimed for this low right here. This low because it takes out that liquidity. I expect a reaction from it or after it takes out the low. So, you know, you just take that. And there's 7R. So again, I didn't smash any bangers on this day, right? 9R and 7R, but I was consistent with my approach. I took 2 losses, but each loss you'll see was just me being too early, right? So you stick with the idea. And I think that's really important when it comes to buy and trade. So I'm gonna press this forward, and I wanna speed this up a little bit. There's one trade I'm gonna go through in detail on here, and the rest I'm just gonna probably just show you. I might just go to my other charts and just show you because it's Sunday and I need to hang out with the kids and stuff. So I do apologize for kind of speeding things up. Okay, we're deep in Asia. This is Tuesday, or at least approaching Tuesday. All right, that's still Asia. Okay. Well, this oh, still have a markup right there. So this is a good piece of price action to kind of pay attention to, right? So again, right, we want to know who's in control, right? We can see that price came down, it came up, and it failed to break that high, right? When it failed to break that high, it came down, it took out these lows, took out some additional lows, right? And overall, people might think, oh, maybe we're bearish now. Now, it depends on what's happening to the left. If we come into a POI, I'm not really sure. I'm not going to look at it right now, but you know, if price then were to continue short, it would have to do so from here. So the fact that this high was taken out after the reaction, the sweeps, and then another reaction here, the fact that the high was taken out, this should indicate that price wants to trade higher, right? This should help you understand your order flow. So, you know, when you're trading London, it's good to look at previous price action in Asia and kind of see what's going on. Now, here again, right, we're looking for the same or similar price action, right? So we want to see a reaction to supply, it's like here, right? Price fails to break above. There's no sweep. Breaks up. It doesn't come back. Okay, fine. Here, we're starting to get some more of that. We got some supply. Right, we have a nice reaction there. Okay, so we're still holding supply. Right, so maybe we can refine that to these little wicks. I don't know if that's really necessary, to be honest. Right, so we have some equal lows forming. We have a nice little demand zone here. I wouldn't trade off of this, but if price comes off of it and then it breaks to the upside, I can say that's part of my demand chain, right? So I'll mark it up. I'll just mark it up. Right, again, because again, you might not consider this like a valid POI because it doesn't, yeah, it comes lower and it's a nice wick and it sweeps out some of this liquidity, but like, to me, that's not like a really strong, like visual, like trading zone. Like it doesn't do anything for me other than the fact that like, I can look back in history after price reacts off it and be like, oh, okay, that's part of my demand chain. Because again, the origin of a demand chain is often, okay, so we're tapped in now, is often fairly like nondescript. It's not really that obvious. But we want to justify reactions. Like, why did price just wick these lows, pop into this, and then go, right? So we've now taken liquidity. We've also mitigated this demand zone. Now, what do I want to see? I want to see supply fail. If supply doesn't fail, then for me, there's no real entry, right? Because that, if supply doesn't fail, that means we're short, so my bias is off. So we're still holding supply, right? And at this point, by the way, this is a valid POI, right? Because it's part of the demand chain. Now, you could, in theory, put an entry on this as more of a risk, because you could say that this low got taken and then this little high here got taken. So you can say that's a chalk to the upside after a valid demand, maybe after a valid sweep, whatever. But again, part of having something that's you can consider high probability means you have it if then this, you know, if that then do this, you know, like just like an order flow or a workflow. For me, I now have a few of the pieces, but I need one more. I need supply to fail. Okay, so supply fails. Okay, so we got something similar here, but when supply failed, it didn't come back for us. It's also out of session, right? But this is Frankfurt open almost. So depending on when price comes back, it can be in session, and you can consider that valid trade. Now it's taking off a bit. Now some people might see this wick as a sweep, right? And this could be a valid POI, right? Now again, in terms of being consistent, I typically like my original reaction, like my first reaction. So this is the first sign that supply is built. This is the first reaction. I like to see it sweep something or it be swept, right? This isn't my first reaction. This is potentially just internal range liquidity on a smaller scale, here to here, right? So I'm gonna slap an order on this. We're starting getting a little further out here. Let's give this a reasonable stop loss. Two pips seems very large. Again, this demand zone could be valid, so maybe you want to cover the low just by a hair. 2.5. I think that's pretty fair. And then either it takes off without us, tag us in, or we lose, right? That's all there is. Okay, so now price is pushing higher. The zone is still valid. Now what time is it? We're pushing Frankfurt open. Okay, so now we're tagged in, right? Now the question is, where do I break even? What is the catalyst, the pullback for my entry? Now for me, you could see it as this high here. That might be too aggressive, to be honest. I'd probably just cover this high and just be like, that's the true level that resulted in the pullback for my entry, if we make it there. Right, because we still have some validity in this level here, but if we start pushing that, I'd be hesitant to take long. Okay, so we push up or break even, risk off, right? So, you know, when it comes to demand chains, if you get into a demand chain early enough or supply chain early enough, you usually get multiple mitigations. So it is possible to scale in, but you really need to be risk off to do that. I wouldn't scale in if you still had risk on the table. So the question now is, what valid POI do I have? I would say this guy right here. Because this sweeps, sorry, you can't really see it. See these lows right in here? Right, just on the cursor, the lines. That sweeps that, right? Now there's a chance it'll come into the sell candle because it's more the range. But I'd rather get a tighter stop loss if I'm going to scale in. So put this here, we'll cover the low, because again, the sweep itself should be safe. And then where's my break-even point? If we make it, this one, potentially, yeah, it depends. If price pushes up again, it would shift. Okay, so that is, do we go deeper? Okay, we don't. So whether or not you'd get tagged on spreads there is kind of debatable. That's very exact. So maybe you get tagged in, maybe you won't. Either way, we're risk off on both of these, right? And if both run, that's gonna be sick. And then if we were to say what's part of the supply chain now, or the demand chain, maybe this guy. I'd be hesitant because this is not the best mitigation, right? So I would still say this is still valid. But at this point, I would probably not put anything on because we're not greedy. Does that sweep? No. It could come off that, but it doesn't sweep. So at this point, right, London open is about to hit. So either we're going to get a sweep and a push. There's that slight sweep and then a push. Now I want to push forward and do other examples. So, I have this higher time frame POI that we marked up earlier. So I'm just going to see if price will run into that, right? Again, we're break even. You should trust your analysis. Price should, in theory, run to your zones. But at the same time, like for instance, okay, right here. We just took this high and we just took this low. So now we're close to this POI. So I'm a little hesitant. So what I would do is I would take profit level and I'll just leave it there. What's the best way to do this? I'll just do orange, right? But I will also watch the lows. So what's the best way to do this? It's close. Let's just see what happens here. Okay, so all right, so that to me I'd be a little concerned about that. So what I would do now is I would just say, all right, if this low fails, I'll put my stop loss here, right? But I'll leave my take profit here as well. So either way, I'm getting out of this trade, but I'm not going to let it run against me, right? I will either get the maximum TP or I will get slightly less efficient TP, but it will allow me to take the most out of trade. Okay, cool. So 25R, 21R, right? And this is just Tuesday. And one of the biggest things about trading early in the week, Monday, Tuesday, is that if you can catch any of these trades based on a very specific model that either fits your plan or doesn't fit your plan, or well, it should fit your plan. If you take these trades early enough in the week, the rest of your week is cake. It's stress-free. If you bang a 10-hour trade on a Monday, you're sweet. You could be done for the rest of the week, right? And it goes into being consistent, right? I put a lot of effort into Monday trading because I want to be done for the week early. I want to be able to support the community. I want to be able to hang out with my kids, all this other stuff. If I can do that, then I can stay away from my computer and it's not a big deal. I don't feel the pressure to trade every single day all the time, right? I can get done when I have to get done early in the week and then I can move on. So if this was my Monday, Tuesday, right? This trade I took, these two trades I did not take because I don't trade London, right? We just kind of marked this up here together. But if I did take these, I would definitely 100% be done for the week because I don't like to overtrade. I don't like to over risk. I don't want to put my capital out there and have to worry about giving back to the market, right? We'll just start next week. It's not a big deal. I'll still do my end of the day markups. That's important, right? So we broke even there, we broke even here, right? So now we've hit this. Now the real question is, could we have gotten short? Now I'm going to just kind of play price through, and we're going to do a quick markup. I'm going to mark this up. We're to 15. I'm going to rip it through. Let's just see. Right, so we know we hit the higher time frame zone. We're just going to study this PA right here and kind of understand, you know, why did this price to the right react off of these levels, right? That's kind of what I want to see. So now the tricky part here is, right, if we're following that entry model that I was talking about, right, we technically have it here, right? So for instance, price came in and it tapped this higher time frame supply zone. So we have to ask ourselves, we have to reassess the question of who's in control. Is it supply or demand? Before it was demand, but now we've hit the higher time frame supply zone. So now that we've hit that, we have to understand, like, well, okay, does that mean supply is taking over or is demand still in control? And what we can see here is, like, if we were to look for longs as a continuation, right? If this was just a catalyst for a pullback, this zone up here, we'd want to look at this and be like, okay, well, that just swept out liquidity. This was our reaction to supply. This wick was our indication that maybe demand was still in control. So what we should do is we should long this position, right? As a hedge. We understand that we hit the higher time frame supply zone, so we know that there could be a shift in control. But just in case it's a catalyst for the pullback, we got to be consistent. We have to take this trade. So we take this long. Right, what is this stop loss? See, I mean, technically the stop loss is a little bigger than I would accept in a live market. So if I'm being honest, I probably would have traded the EQ because I don't really like to trade more than like a 3 to 3.5 pip stop. So for me to get a 3 to 3.5 pip stop loss, I'd have to trade. I would have to trade from the extreme or from the EQ. So price probably wouldn't have tagged me in, but let's just say we took the hedge anyway. Because maybe we market executed because we were okay with a 4 pip stop or whatever, right? Let's just do that. You know, the catalyst for the pullback is what? Right? Now, because we're in a hedge position and we need to be careful, normally I would use this high here because that's the one that pulled back. But in a position where we're slightly unsure and we need to be cautious, we could use this level as a break-even level, right? But for the sake of being consistent, I would say it's this, and then I would take a loss, right? But again, there's a lot of reasons I wouldn't have taken this trade, which I've already explained. But that being said, we also have some price action that we need to break down in here, because now that this demand zone has failed and we've taken that loss, we need to understand what's going on. We need to break this down. Because one thing you'll understand is that even though I'm sitting on the 1 minute right now, this range is a higher time frame POI, right? All ranges are just higher time frame POIs, right? A 15-minute range is a 4-hour POI. A 4-hour range is a daily POI, etc. So we have this price action building the way it's building, and while supply indicated that demand might have given control here and we could have taken long, we just took that loss. Once this demand fails, we don't just turn off. We don't just stop looking at price action. We don't just stop trading. We look for other opportunities to get into the market with the new order flow. So here, that's a sweep, technically, right? Even though that we had this level as our potential entry zone for the long or a catalyst for the pullback, in reality, what it's become is a sweep. So we adapt, we shift. So now this becomes supply. Right, it's mitigated this higher time frame supply zone. Sorry, you can't really see that, but that's supply, the higher time frame supply. So now this is just part of the supply chain in reality, right? So here we have this, and probably this. All right. We also have this. The issue with this is it doesn't take any liquidity out. So I assume it would be induced, but we'll mark up the POI just in case anyways. And again, we're just gonna speed through this part. I gotta speed up a little bit. Now there's probably entries down here. Right? There's definitely entries in here, but I need to move on. All right, okay, so what happens? What does price do? Okay, so it looks like price came up and it used all this as liquidity. Now this is very far away. We're not necessarily going to put a trade on this from over here. We're going to look for the reaction after the fact. We're going to watch price come into it, and then we're going to see if we can trade from it. Now, I had these supply zones marked, price came through, and it looks like what it ended up doing was taking out this high. It just wicked it. Now that's internal range or external range liquidity, right? So what we have here is after we took out the external range liquidity, price started to drop to the downside. So it looks like it didn't want these supply zones. It just used it as liquidity. So maybe you caught an entry here, maybe you took some losses. It's fine, right? As long as you're consistent. So here we have this, doesn't quite reach that. Oh, it's not the whole level. Right, so this wick mitigates that, so we have this potential supply chain. Again, I am being quick about this. Right, I just want to justify this reaction, right? Because I'm not trading off of it, but I want to understand why price did this. This is Asia, again, right? The price pushed it down. Now I want to look for the same thing on the opposite scale, right? I want to see a demand reaction sweep and then price kind of give way and try to give us an entry kind of thing, right? That's what I'm looking for, potentially. Let's see. There may have been an entry there. Right, this looks like it's part of this kind of supply chain. Looks like it just comes into that wick right there. Try this out. Oh, doesn't quite tap it. So, right. We had this reaction, price pushed up, this high gets swept, right? And then price comes into, it looks like the sell candle. So for me, if I were to have traded this, I would have traded from here and I wouldn't have been tagged. Right? And then, right, so then price pushes down, push it down again, push it down, push it down. Let's see. Let's go back to the 15. Let's go back to the 15. Play price forward. Oh, look at that. It did tag me in, eventually. Alright. So that eventually got tagged in. Aim for, there's probably 15-minute supply zones that we gotta be aware of here. Yeah, right in here. Alright, so we have this kind of 15-minute buy to sell wick, cover this low, right? This ends up being catalyst for a pullback, it seems. Right, good place to take profits on that one trade, right? Again, it's the same thing. Supply, reaction to demand, this gets swept out right there. Price does eventually come back, even though it didn't tap in that first time. So whether or not you leave that on, you know, could be a tough call, right? And then for here, this break-even level is pretty far away. It's like 13 pips, so you'd have to figure out if you want to break even here. Now, if you want to be consistent, again, you're going to do this. But what you'll notice is the same thing. Price doesn't really come back to these entry zones. If you get them right, you're usually good. You get a strong reaction and price pushes away. Here, that's our zone right there, and this would have been 19R, right? Now, what do I want to do here? Let's close this out. Let's go back. All right, you get that deep pullback. There's a good place to start. So this was Thursday, and then Friday. I'm actually just going to open up my old charts. Where's Friday? So I do want to close this video up. This is Thursday. There's that trade there. Okay, and here, this one's very textbook after the fact. So we'll go back and find this one and just play it through. Where are you? Right here. All right, okay, so at this point, price came into what looks like this little nondescript, like 15-minute buy to sell wick, right? This is a 15-minute buy to sell wick. That should be anyway. Let me just circle it up so you can see it. I think anyways. Let's see. I have no idea where that circle is. Oh, it doesn't show on here. It's in here. That's okay. 5 minutes. Yeah, look, 5 minute buy or sell wicks, right? You can tell it's just the range. That's all it is, right? So that's what price comes into. So go back to the 1 minute. Now, again, this isn't something that you need to trade off of. It's not something you need to trade off of. However, when price reacts like this from it, you want to go back and you want to understand why. Why did price do this, right? So maybe you don't catch this initial entry because you do have like a very quick chalk. You take that high and then you take this low, right? The price doesn't quite come back, right? So fine, what happens? Price comes down, and then what are we looking for? We'll look for the same thing over and over again. I'm gonna call it after this one, right? Price comes in, demand, right? Here's the initial reaction. It doesn't sweep much. Price pushes up, takes out all this liquidity right here. So even if you did consider this a sweep, the demand doesn't fail, right? When do we look for the trade? After demand fails. So this one is a very clean POI. Right? You can say that it's your sweep. All the liquidity's been swept. Where's your break-even level? Right here. This is the one that caused the pullback into your trade, right? And what happens again? The magic of using this entry model is that price really just pulls away from it. If you have the right area, and what you'll notice is that if price were to, well, maybe not notice because I don't have any examples of it, but in your studying, you should see like how often does price just hit it and run. If it sits and you start to get some like substructure, bullish momentum or something like that, I'd be cautious. I'd probably get out of that trade, to be honest. But more often than not, we hit it and it runs. Right? You can get away 2.5 pips, and then we'll do this, right? And again, what's like a valid POI to trade into, right? Probably this low right here. Right? We're just taking modest trades. This 10R, right? Probably could have traded lower, maybe not. Yeah, that would have taken you out. So that's a good, strong level to take profits at, right? Breaking even, your risk off, and you know everything's clean and good to go. All right, I hope that helps. There's probably more trades than that, but I don't have too much time, unfortunately, because I screwed up my recording yesterday. So that's just the hard, cold truth. I hope it helps, guys. I hope you guys have a strong trading week. I still technically have to edit this, but there's a chance that I'm just going to throw it on the site without the editing and without the music because, again, I want to hang out with the kids. So I'll catch you guys later, and yeah, have a great Sunday. Take care.